Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Hamizah binti Kuswadi, and today I will be discussing about the racial analysis and maqasid Sharia. So, do you want to know what we want to talk about? So, let's continue. So, in this discussion, we will have two parts, which is the first part is Sharia screening process, and the second part is Sharia screening and firm's performance. So here is the first part of the discussion, which is the Sharia screening process. So, what is Sharia screening? According to the author, Sharia screening is conducted to eliminate any involvement with sinful element which requires analytical judgment, thorough research, and a well-elaborated process and time. There are two types of screening, which is the first screening is positive screening and second is negative screening. What is positive screening? Positive screening refers to the investment in the companies that involve with providing basic necessity to the society. And for the negative screening, it screens the companies that have high concentration on unethical activities such as animal exploitation and bad relationship with the employees. Sharia screening is more focused on two things, which is business screening and financial ratio screening. Business screening is conducted to investigate the nature of the core business, and for the financial ratio screening is conducted to check the revenue of the company, whether they are free from the prohibited income or they are involved with it, but under the acceptable ratios that has been permitted by the Sharia scholar. Okay, this is the table of screening criteria for the Security Commission and Dow Jones Index. It is the business for the business activities. So the following is the criteria that is prohibited under the Security Commission, which are financial services based on riba, gambling and gaming, manufacture or sale of non-halal product or related product, conventional insurance, non-permissible entertainment activities according to the Sharia, manufacture or sales of tobacco-based product or related product, stockbroking of share trading in the Sharia non-compliant securities, and lastly, other activities deemed non-permissible according to the Sharia. While under the Dow Jones is the alcohol, tobacco, pop-related product, conventional financial services, weapon and defense, and lastly is the entertainment. If the company consists this criteria that is prohibited, the company will be classified as the non-Sharia compliant companies. And next is for the financial ratios. There's the acceptable involvement on non-permissible element. And for the company, which is for under the Security Commission, is the acceptable involvement on non-permissible element that are subject to purifying is the 5% benchmark on income based on riba, 10% benchmark on income based on prohibited element but cannot be avoided, 20% benchmark on income from rental payment from Sharia non-compliant activities, 25% benchmark on income from generally permissible, and half maslaha, but there are certain activities that may affect the Sharia status. By under the Dow Jones, the excessive involvement of non-permissible elements is all of the involvement must be contribute less than 5%, while the three elements need to be less than 33%, which are total debt divided by trailing 12-month average market capitalization, and the second is the sum of the company's cash and interest-bearing securities debt divided by the trailing 12 months average market capitalization, and lastly is account receivable debt divided by 12-month average market capitalizations. And for additional criteria for the security commissions is the public perceptions to the company, and also the company must bring maslahah of benefit to the company, to the community. If the companies have this non-permissible element, but under the limit or the benchmark, the companies will have the title of the Sharia compliance companies. But if the companies have exceed the benchmark, the companies will be classified as the non-compliant companies. So here is the second part of the discussion, which is Sharia screening and firms performance. So, how the Sharia compliance contributes toward good corporate governance? According to the author, corporate governance are conducted to assist the company to achieve its objective and enable the company to run smoothly. This is the main reason why the companies need to have a good corporate governance practice, which consists of three major components, which are transparency, disclosure, and accountability. So, the Sharia compliant companies are subject to greater scrutiny by the regulators and institutional investors. The greatest regulatory scrutiny influences the quality of reported earnings. The public perceive Sharia compliance companies to be more transparent and to possess greater trustfulness compared to the non-Sharia compliance companies. The perceptions of the public that Sharia compliance companies possess better values than the non-Sharia compliance companies shows that the demand for the high-quality financial reporting are greater for the Sharia compliant companies. So next is, let's discuss the issues of conflicting views regarding the relative performance of Sharia compliant firms and non-Sharia compliant firms. The firm's performance are used to measure based on the market adjusted returns, which measures the difference between the stock returns and market returns using the stock price and the market index. In order to evaluate the firm's performance, we are using four types of control variables, which are the size, the EPS, the growth, and the outputs. For the first control variables is size. Size is defined as log of firm's market value, which is the large firms have lower agency problem due to increased interest from stock market participants, which have the investors and the analysts. Lower agency problem should lead to a better performance of large firms. And next is EPS, that defined as the earning per share. The major investors' interest in a firm. It also measures accounting performance of firms. The higher investor interest and superior accounting performance is expected to translate to a better stock price performance. The next control variable is growth. which is defined as the growth in earnings per share over the past 1 year. According to the author, the firms with higher growth have a better stock price performance. And the next is the auditor. Auditor is a dummy variable that takes a value of 1 if the firm is audited by one of Big Four auditors and 0 otherwise. Having a reputable auditor serves as a mechanism to signal outside investors that a firm is governed properly and has less agency problems. So here the lower agency problem should positively affect the firm's performance. So here is the difference between the Sharia compliance and non-Sharia compliant firms. Sharia compliant firms are claiming that with the low leverage, low account receivable, and low cash reserve may lead to the better performance rather than non-Sharia compliant firms' performance. But here is the argument in the financial characteristics of non-Sharia compliant firms that may be the reason for their better performance, which is with high leverage and high account receivable and also high cash reserve. For the high leverage, the associates with the non-Sharia compliant firms can act as a governance device and can significantly reduce the agency problem. With the high leverage ensures that managers of non-Sharia compliance firms generate enough cash flow to reduce the bankruptcy risk. But for the high account receivables and high cash with better performance, which is according to the author, it's considered the extent of account receivable as the channel via which firms can develop long-term relationships with their clients. This shows that with a long-term relationship with their clients, it may lead to a better performance. Lastly is the better performance of firms with a high cash reserve. They argue that the firms with high cash are able to fund large capital expenditure, thereby improving their performance. So next is the difference in performance between Sharia and non-Sharia compliant firms in different legal regimes. The common law countries provide a better governance environment relative to civil law countries. According to the research, it is significantly lower performance of the Sharia compliance firms relative to non-Sharia compliant firms in the both legal regimes. The Sharia compliance firms is significantly underperformance relative to the non-Sharia compliance firms by 0.815 basis points in the common law countries, while the difference between the two groups is 0.1077 basis points in the civil law countries. So this is the last part of our discussions, which is the difference of performance between the Sharia and non-Sharia compliant firms during the crisis and the normal periods. According to the research, the Sharia compliance firms are claiming that they are outperformed relative to the non-Sharia compliant firms during the normal periods and doesn't being affected during the crisis period. So here we can see for the non-Sharia compliant firms during the crisis and the normal period. The first is the high leverage exposed non-Sharia compliant firms to bankruptcy risk more during the crisis period relative to the normal period. As the result, their performance should suffer more during the crisis relative to the Sharia compliance firm. And the second is the high account receivable of non-Sharia compliance firms also expose them to the risk of non-payment by their clients. So here the result will be shows that they should underperform Sharia compliance firms during the crisis period. So the conclusion here, the Sharia compliance firms will not be affected during the crisis period, but in the normal period, Sharia compliant firms will have underperformance relative to the non-Sharia compliance. But for the non-Sharia compliant firms, during the crisis, they are being underperformance relative to the non-Sharia compliance. But in the normal period, they are being outperformed relative to the financial, relative to the Sharia compliance. That's all from me. Thank you.